Hello guys, welcome back. Today's Thursday, it's the webinar day, but most important, yesterday was the CPI day for USA. And if you haven't watched my video from yesterday, you missed another good trade. And these are the reasons I always ask everyone to subscribe to the channel and let this bell, okay, you see the little bell there? Put it on, because then every time we upload a video to the channel, you get notified. And you get notified at the minute we upload the video. So then you don't lose the time of watching that video and losing some opportunities it may be, right? So subscribe to the channel, give us a thumbs up on this video as well, and let's go to the content. All right, yesterday we had the CPI from USA. We had 4 CPIs, 2 core CPIs, one month over month and another one year over year, and the other one that was the normal CPI, year over year and month over month. Out of the 4 CPIs, one of the CPIs, the CPI year over year, came in a bit lower of what was expected. And I've mentioned that I was expecting a bit of a lower inflation. As expected, I've mentioned in line of the consensus or a little bit lower of what the consensus is thinking. And we got a 2.9% year over year inflation, CPI inflation, right? Consumer Price Index. And the expectation was 3%. So 0.1% lower than what was expected by the market, the consensus, the participants, right? Now, how did this influence the market? I've mentioned about euro dollar, pound dollar, and gold, all right? I'm not trading USD JPY just because my strategy doesn't take that much volatility in consideration. And right now, what we have on the market is a very huge volatility on the Japanese yen, and therefore, I'm stepping back on that. As a trader, you need to understand where are your strategy welcoming, all right? If your strategy needs a lot of volatility, then this is the perfect time for you to be trading USD JPY, for instance. If your strategy is more mid-low volatility, then euro dollar, pound dollar, USD CAD, all of those sort of anything that doesn't have the JPY and includes euro, pound, CAD, US dollar is welcoming for you. All right, this is just my take, and this is how I observe the market during, from the past experience I had. Now, I've mentioned about euro dollar going up, pound dollar going up, as well as gold going down. I looked at the comments on yesterday's video, and a lot of people were misunderstanding. What do you mean about gold going down and euro dollar going up and pound dollar going up? What's the correlation between that? Because there's no sense for me. And you're right, there's no actual correlation between gold and euro, or let's say US dollar and gold. Gold for itself is already a very strong asset, all right? So at this moment, at this exactly stage of the market, I've always been talking about one and only one thing, the context, all right? It doesn't matter what the data comes in. If the market is not caring about that data, then the market won't be moving. The market needs to be awaiting that data. It has to be expectation. It has to be, some sort of excitement for that time to come on the market, and then the market makers or the market participants hit the market very strongly, and the market has a move. All right. So it doesn't actually necessarily has to be, let's say, CPI will move the market as strongly as never seen. Some of the CPIs do, some of the CPIs don't. Like we had yesterday, we didn't have much of a move. Why? Of course, because the CPI month over month, the core CPI month over month, the core CPI year over year, and the CPI year over year, they were very, very close as the in line, as the expectation. So therefore, why should the market react so strongly to that? But indeed, we had gold dropping, okay? Now, if we take all this together, put it up, what are my expectations now for the Fed? Well, I was just writing a blog this morning. So if you don't know, we do have daily blogs. I've been letting everyone know about that already. So if you're not waiting on every day to get those blogs, you're pretty much, I don't want to say wasting your time, but you wasting opportunities again and again. Show me, Dave, please put it up how those everyone can put the blogs here, because it's very, very easy. You can just go to ACY website, going to learn and then market research, and then you can find all the analysts we have here in the group. We have myself, we have Duncan, and some other analysts as well. Right, so I was writing a blog this morning exactly on how the Fed will react with this lower, in line but still lower than expected CPI. My expectations for the Fed is a 25 basis point cut, very well priced in for the market already. Okay, very well priced in. There's only one thing that will change the mind of Fed of not cutting in 18th of September. And this is the NFP for next month. All right, next month NFP, it's going to release the data from the month of August until from the data from August will always be released on the next month. So this will be September, the first Friday of September. What day will that be? Let me have a look. The first Friday of September will be on the day 6th of September. All right. So 6th of September is the NFP day, and this is the only news, only data that I see that will change the Fed perception of the economy. That yes, inflation is coming down, unemployment is still high, but it's not on high historical levels, but still high somewhat. So the Fed is set to cut 25 basis points. I don't think the Fed will cut 50 basis points. All right, this is so big stretch, and I've mentioned that so many times already here on the channel. So be ready, because the Fed will cut 25 basis points. All right, and this will happen. And everyone, all the market is expecting it, okay? Now, how will the US dollar react to it? I will tell you tonight on my webinar. So if you haven't yet registered yourself for tonight's webinar from 7 to 8 p.m., the link is gonna be on the description of this video. So click in the description, go into register for the webinar, and then you will be redirected to the ACY website, and then you can put your email in and we send you the link straight to your email. All right, guys, thank you so much for watching me until now. If you did like this video, please subscribe and share this content with your friends, and don't forget to give us a thumbs up. And if you have any comments, just put down below on the comment section. Now, I see you tonight, or I see you in the next video. See you guys, bye-bye.